This week on Saturday by 10 a.m. we have answers to insurance myth that confuses you. Insurance doesn't fail people, but wrong understanding does. Most people have misconception over insurance, which is so common, but continuing to trust them isn't right. Many people buy insurance based on advice, advertisement, or tax benefits without truly understanding what their policy covers and, more importantly, what it doesn't. Link is in the description. Click and join the webinar. We'll see you there.
If you have ever wondered what lies beyond mutual funds and direct stock picking, this video is for you. In the next few minutes, let's uncover the different types of PMS and help you understand which type might fit your investing style the best. And towards the end, there's also a quick framework on how to choose the right PMS and where ithought.PMS fits in. We are by now well aware of the basics of a PMS, right? The 50 lakh regulation, the diversification principles, and how you get the expert advice. But there is definitely another layer to this, which is what we will talk about in this video, the different types or the different ways of classifying a PMS. The first will be by who controls decision making. In this, the most common format is the discretionary PMS. Here, once you are onboarded and your account is funded, the portfolio manager has the authority to decide what to buy, what to sell, and when to act. You are not required to approve each individual transaction. This suits investors who prefer a hands-off approach, are busy with their own careers or businesses, and are comfortable trusting an experienced manager's judgment. It's very similar to appointing a full-time professional to manage your family's investments with a clear mandate and philosophy. The second format in this is the non-discretionary PMS. In this model, the portfolio manager still brings ideas to the table, what to add, what to exit, how to rebalance, but execution happens only after you have reviewed and approved each recommendation. This tends to appeal to investors who like to stay involved in every decision, maybe because they enjoy the markets or because they want that extra layer of control. But the trade-off here is that it demands more time and attention from you and can slow down execution in fast-moving markets. The third format is the advisory PMS. Here, the manager's role is largely to provide research-backed advice and guidance. You retain full control over execution, administration, and implementation of that advice. Now, this is ideal if you are confident about handling operations but want a seasoned expert to validate your views, offer ideas, and help you avoid behavioral mistakes. Ultimately, choosing between a discretionary, non-discretionary, and advisory PMS comes down to how involved you want to be, how much time you can commit, and how comfortable you are delegating decisions. There is also another lens through which PMS is often described or classified, by the asset class or strategy style. An equity PMS is primarily focused on stocks, large caps, mid caps, small caps, and is designed for long-term growth with higher risk and higher return potential. A debt PMS, on the other hand, centers around fixed income instruments and is built for investors who value stability, predictable income, and capital preservation more than aggressive growth. Then there are hybrid or multi-asset PMS offerings, which combine equities, debt, and sometimes even alternatives like precious metals, ETFs, or global securities. These aim to deliver a balance between growth and income while improving diversification so that no single asset class dominates your outcomes. In practice, good PMS providers use these building blocks to tailor portfolios to different risk appetites and time horizons. So where does ithought.PMS come into this picture? At ithought, PMS is built on a strong foundation of research, a value-driven philosophy, and a deeply client-centric approach. We are SEBI registered and focus on building portfolios from the ground up, using macroeconomic insights and valuation discipline rather than chasing short-term market momentum. Instead of selling the flavor of the season, the endeavor here is to construct resilient portfolios that can compound over longer periods. ithought.PMS also offers multiple strategies to suit different kinds of investors. For someone who prefers stability and blue chip exposure, there is a large cap oriented strategy like TrueBlue. For someone who's okay with the allocations moving between the large, mid, and small cap space, we have a flexi cap strategy called Solitaire. For investors who can handle more volatility in pursuit of higher long-term growth, we have a small cap strategy such as Vriddhi. There are also multi-asset and NRI-oriented offerings like Sphere and Neo, which allow investors to diversify across assets and geographies in a structured way. The idea is simple. You should be able to choose a strategy that aligns with your goals, risk appetite, and comfort, rather than force-fitting your profile into a rigid template or a mandate. If you are trying to decide whether PMS is right for you and which PMS to choose, a simple checklist can help. First, be clear about your risk tolerance and your investment horizon. PMS works best when you're thinking in years, not months. Second, decide the level of involvement you want. Do you want a professional to take the lead, or do you want to be involved in every step? Third, map your financial goals and liquidity needs. When will you need the money and for what purpose? And finally, of course, look closely at the fee structure, the transparency of communication, and the long-term philosophy and track record of the PMS provider. So to wrap up, PMS is not just about picking stocks, it's about building a thoughtful long-term portfolio with professional guidance. Choosing ithought.PMS means partnering with a team that believes in disciplined, value-driven investing, personalized portfolios, and very clear communication. Whether you're looking for blue chip comfort, small cap growth, flexi cap growth, or multi-asset diversification, there is likely a strategy that can match your journey. If this resonates with the way that you want to build wealth, start a conversation with our team and explore which PMS format and strategy could be the right fit for you. Get in touch with us using the contact details on your screen.